Hi guys, welcome to another Ayodeji Alfred video. How you doing? How's your week? So last week I did a video about the challenges of retail investing, right? You can go ahead and watch that video if you haven't seen that video, right? In that video I talked about many things, right? And of course one of the things I did in that video was also showed you guys my Trove app, which technically opened my portfolio, right, to everyone, right? So henceforth, I'll refer to this as my YouTube portfolio. I had about $67 in it last week when I first shared the portfolio. And so I will update on this channel how and what I am doing, how I'm making my investment decisions, I'm choosing what I'm investing in, and most importantly, what I am learning along the way. Now, the idea behind this type of transparency is firstly to build a portfolio of investment that I'll be proud of at some point in the future, right? But secondly, I want to share my journey, my successes, my failures, my thought processes with you guys. And finally, I want to encourage, even if it's just one person, to start investing today by demystifying it, because I know the whole process of investing in the stock market can be really, really frightening for many people. Now, if you're interested in this kind of content, you want to see my portfolio updates, you want to see what I'm doing, I'm investing, I'm analyzing stocks, and of course, you want to see my portfolio, you want to watch my journey, then I think I would invite you to subscribe to the channel, invite many people to do the same as well. Smash that like button for the YouTube algorithm, and just join the journey really. All right. So today I will attempt to add the shares of Domino Pizza, right, to this portfolio that I'm showing you. Currently, I only have coin in this portfolio, so I'll attempt to add Domino Pizza to this portfolio. Now, in this video, I'll be sharing my reasons for investing in that share. And as always, I'll just be sharing my opinion. This is not going to be financial advice for any reason. So before you invest, do your research and all. All right, so let's start with the shares of Domino Pizza and what I think about it. So first things first, I like the industry in which Domino Pizza operates, right? So it operates in the hotels and entertainment industry. But more importantly, Domino Pizza is a recognizable brand name, right, in that industry. Now, while that industry has, what we call it now, has experienced slowdowns due to the global pandemic, we understand that this is not the case for Domino's Pizza, right? In the last 5 years, or rather in the last year, 2020, Domino Pizza opened about 624 new stores, which means it was somewhat not impacted by the pandemic, right? The company has been operating for about 60 years and has continued to sell a lot and lot of pizzas every year. Now, in the year 2020, the the revenue of the business, right, was about 4.1 billion, right, and that grew from 3.6 billion, representing about a 14% jump from the previous year. So the business already has a large footprint all over the world. It has about 17,000 stores, right? So if you look at the financials here, it has about 17,000 stores all over the world, right? Now, but the interesting thing is that this business owns a very small percentage of that store, right? And it's going to continue to expand its footprint thanks to certain clauses that exist in the franchise agreements with its franchisees, right? What's that clause? That clause is a clause where it mandates the franchisees to open a minimum number of stores on an annual basis. So this is something that is going to guarantee the growth of this business. All right. Now, my second reason is this business operates what I'll call a very simple business model, right? The business model is so simple and how it makes money is just so easily understandable to me and to anyone, right? So how do they make money? It's very simple. They have a recognized brand name, right? And they license that brand name to other people by way of franchising. And in turn, they collect 5.5% of revenues earned from the sales made by those franchise business. Very simple business model. Now, this activity accounted for about 18%, right? As you can see here, it accounted for about 18% of their revenue, right, in that period of time. But what we can also note from looking at this financial statement is that this contributed about half, right, to the gross margin. So if you look at the revenues here, you can see revenues from franchise business 503 and revenue from international franchises 2.4. This revenue we're looking at here technically has zero cost associated with it. So it's pure profit, it's pure revenue, it's pure profit that is going into the account of Domino's Pizza. One other thing I would say is that the business is also protecting its revenue from competition, right? The company, owns its pizza delivery services, and it has reportedly refused to work with, isn't it, with many delivery services. And the reason for this is because it believes that working with these guys is going to dilute, right, the restaurant's profit. So you look here, it says Domino Pizza refuses to work with delivery apps, saying that their fees, their fees dilute restaurants' profit and distance chains from their customers, right? So this way, the business can continue to keep its costs down, right? By just working directly with the customer, investing in their delivery methods, and I think that makes it a good buy for me. The third reason I would say is that I like the forward approach of this business. And of course, it's very easy to set up shop, right? So we already mentioned that the business is not doing anything new or revolutionary, like landing, the man on the moon, right? It's not doing that. It's just selling pizzas, right? It's selling bread, it's selling dough, right? But one thing I would say is I like the swagger with which the business does this seemingly mundane activity, right? The company is currently investing hundreds of millions in GPS and proprietary tracking systems, right? And the company is also testing. Let's look at this article here. So the same portion of the article says it has spent hundreds of millions of dollars in digital infrastructures, including proprietary sales systems and GPS tracking, right? And one other thing it says here, it is also testing on the road robots at one Houston store, right? So if we look at this article, right, from Forbes, you can see this is one of the self-driving technology that is currently testing. So Dominos and Neuro are kicking off a robotic pizza delivery pilot in Houston this week, right? This is going to give customers the options to have orders brought to them by the Silicon Valley autonomous driving tech developer, right? Small vehicles that look a bit like toasters on the wheels, right? So if you look at this video by CNN, right, you can see what the autonomous vehicle looks like. So for me, this is really interesting to see. I can't wait to see how this is going to continue to increase the speed of pizza deliveries. And the good thing, all of this is developed in the headquarters and of course can be passed down to the many Domino's pizza stores all over the world, right? In addition to that, the business also costs very, very little to set up. According to the financial statements, they say that the stores, including their pizza theater images, are generally smaller and less expensive to build to to furnish, and to maintain as compared to many other restaurant concepts. And they create a positive experience for their carry-out customers. So just imagine, a giant like this, you know, being able to set up shops, very easily, very efficiently with minimal cost. It means it's going to be investing so little in the capital expenditures, and then of course it means the business can grow, very fast at little cost. So I believe the company will continue to enjoy some competitive advantages, in the future, right? And the final reason is, for me, I believe the company has strong fundamentals. All right, so let's look very quickly, at this guy here, right? This is the share price of Domino Pizza in the last 5 years, right? And what you quickly notice is that the business has, the share price rather, has jumped 251% in 5 years. When you compare that to the nearest competitor, which is Papa John's, right, you see Papa John's shares has dropped by 57, rather has increased, right, by 57% in the same 5-year period. Now, let's look at a quick chart, right, of Domino Pizza, Papa John's, and compare it with the S&P 500. So when you look at this, you can see what we mentioned, right, how Domino Pizza, you have Papa John's in blue and Domino Pizza in yellow, right? And then you can see Domino Pizza all the way here, always overperforming, the stock market in that rather the S&P 500 in that period of time, right? So this is a company I believe that will continue to outperform the market, right? The S&P 500 increased by 100% in that 5-year term. Now, other than that, if you look at the financial statements of the business, you see that you see a lot of things there, but I can easily give you a snapshot to say the operating margin of the business is about 39%, and the net margin is about 12%, right? You look at the PE ratio of the business, we can say the PE ratio of the business is currently at about 36, right? The trailing PE ratio, right, is currently about 36. Right, compared to Papa John's, PE ratio of 52, right? And then of course, if you look at the average PE ratio of the S&P 500, currently sits at 45, right, in the year 2020. So all of this makes me feel very confident in this business. I feel that this is a business that has continued to grow. I feel it is fairly priced at the current price of about 400. We can look at the current share price and look at, the current share price is about 447, right, as at the time of filming this video. So I feel it's a business that is well priced, and I feel the business is going to also continue to pay dividends, right? So which means that the dividends paid is going to continue to add to the returns that are being generated in the future. All right, so this, like I said, are just my opinions. So I'll then jump into some analyst reports just to see what some of the analysts, right, are saying. So we can look at the analyst report here. This is an analyst report from Refinitiv that was published on June 11, 2021, right? And they go ahead and say the same thing. So the price here as at the time of this close was about 442, and the trading PE ratio was 35. The annual dividend was $3.76, and then they tell you that the 52-week high and low is about 52-week low is 319. So I feel there might have been an opportunity to really buy the opportunity to really buy the shares at very cheap prices may have passed, but for me, I'm still going to go ahead and invest in it today for the long term. The analyst recommends a buy, right? Not a strong buy. So you look at a strong sell, hold, buy, a strong buy. So they recommend a buy to the business, and you can see just exactly some of the things we've spoken about here earlier. 1-year return of 15%, 5-year return of 247%, right? And then of course they go ahead to summarize the business. It's operating in 85 markets, right? What else do we have here? So if you look at the peer analysis that was done, right, with the likes of YUMC, right? And all these other companies, you can see 1 month return was 2.4, 3 month return 25%, almost outperforming many of its competitors or many of its peers, right? And then, of course, the market capitalization is about 16 billion. So I think it would be really worth an interesting look to look at many of its competitors, right? Just to before you invest as well. All right, so you have McDonald's, Yum Brands, and the likes. All right, so if you look at the price target, the 12-month price target, um, we still have the chart analysis where this analyst tries to predict the share price in the next 12 months. Somewhere on the high side, you would see that the share price can go as high as 480, and then of course can go as low as a little over 360, right? So clearly you need to trade with caution, and then of course try to understand what you're investing in. I think as a final word from me, I would really say that past performances, are not necessarily reflective of future returns, but I feel confident to add the stock, to my portfolio. Now, this is a business that will continue to generate money as long as people will continue to eat. Like every other business, it has its own risk. And for example, a well-published food poisoning incident could dent, the image, right, of the business, right? Customer taste could change in the future, and of course, that will send sales tumbling. But I think I have enough faith in the management of the business to be able to turn around these corners, should they arise. All right. And so that will be it from me. If you enjoy this content, feel free to like, subscribe, and share with your friends. And until next time, I'll then go ahead into my Trove app, and then I'll be buying this shares with the little cash that I have sitting here, about $100. All right, guys. See you next time, and bye.